All right, hello everyone. Welcome back to the channel. It's that time of year again. It's the 4th of July, celebrating our country's independence. But I also want you to celebrate your independence and your financial freedom. Okay. And I want you to join up and see what we're doing in the Income Navigator and Active Trader service. So we're going to bring you an exclusive promotional offer. All right. So let me share my screen. We'll give you a little bit of an overview on it, and you can see if this is something you want to jump into. Take advantage of it right now. So for a limited time, we're going to give you 40% discount on the first month for all new members of either, again, Income Navigator or the Active Trader Pro service. But again, it's only available to July 5th or until all of the spots are taken. So don't miss out on this opportunity. Okay. So in order to take advantage of this offer, go ahead and use the code 40OFF. That's 40OFF. Go ahead and use that at checkout, and you can get started on it right away. As well, for our loyal existing members, we haven't forgotten about you. Reach out to support@mrtoptick.com and find out about our annual subscription plans and our 6-month plans. Trying to give you a deal on those as well. And as a special bonus, what I'm going to do for you here is we're going to attach a video so that all of you out there that are not members can see what our members training is like this week. So we're going to do a couple of those. So attached here is a training that we did today, and I hope you like it, and it'll give you a sense of exactly what we're doing. We'll see you hopefully in the Discord channel. Sign up, celebrate your financial freedom. Let's see it. Bye-bye. All right, so let's jump in and get rocking on the session today. Let's get through and let's do a little bit of market profile. And as we're going through each of the different setups, we'll also decide what type of trades are out there. I'm sitting right at that 50% buying power area. So, right at the edge where I could place a trade, not place a trade. So we'll see what trade setups are out there. We had one trade come off today for a winner already. So we're already up one trade on the session today. So if you weren't in on the Aussie or the Aussie Strangle, not the Ozzy Osbourne Strangle, but the Aussie Strangle, that closed today for a little over 50% winner. I actually closed that for me in multiple accounts. So I had it in the small accounts. I'll be updating the small account today, had it in another account, and then this is not the same as the Active Trader service, but we also closed 2 trades in Active Trader today as well for winners. So 2 more winning trades in that service. I'll be posting those shortly when this is over here as well. So everything working well. Yeah, I don't know about the XL112 this week, but if I can, I will. So we'll talk about that C-dub, and we'll get into it. So let me share my screen. Let's just jump into it. Make sure I get the right thing. I've got both trading view and toss charts. So we're going to stick with toss today. Let me jump off video so you can see the charts, and let's just get into it and see what's going on for the session. So we'll jump in on ES here. If we take a look at the weekly chart here on the S&P, starting this week with a little bit of a down move today, we're down 11 points, no real big deal. However, if you're looking at the weekly here, okay, nice uptrend. We've come down before, bounced off the 21, moved back up, set new highs. Now we have maybe 2 weeks, 1 week of indecision, a little bit of a doji candle there, and then we're down today on the session. I would expect to come down to this either trend line or the 21 EMA, and then maybe we bounce and continue to go higher. I don't really see any catalysts out there to knock the markets down substantially. Nothing that's happening so far in the world is making me think that this is anything less than just another potential pullback, bounce, and move higher. There isn't a reason, in my opinion, to see any kind of a sell-off. Are you not seeing my chart? I can see my chart. Do you guys not see it? Okay. All right. Good. You should see the chart pretty well. That's what I see here. So it looks like we should be good. All right, yeah, everybody can see it. All right, perfect. Anyway, I think the market looks good, and if you believe in Tom Lee or trust in Tom Lee as well, he's telling you that we're going to 15,000 on the S&P by 2030. So 15,000, that is a 300% increase from where we are today. So I'm excited. There's no reason to not be bullish at all. So, all right. So there we go. Things are bullish here on ES. Now, even on the daily chart here to the side, things are pretty much just sideways moving. We're in a nice little, as Don Kaufman would call this, the volatility box. We've been in this for almost a little over 2 weeks now, just in this sideways consolidation. The nice thing on the daily is you've got MACD moving down, you've got RSI moving down from overbought. So we're taking the overbought situation on the daily a little bit out, but we are still overbought and rolling over a bit on the weekly. So that would make me think, nothing more than a pullback, but I think it gives us chances to add some new potential trades. Now, what trades would you enter here? If we're looking at this, typically, if something's bullish and pulling back, I certainly think on ES, a 112 is still a good setup. Any style 112s, whether it be the long-term campaign trades that we're doing, and if you're looking at trading today as well, if you didn't enter, if you don't have all of your trades on ES, this is your opportunity now, because we are sitting today at the 122 day. You can wait till Thursday, but in the next couple days or so, any day is probably a good day to enter. It's a little bit of a down day today. I'm not saying tomorrow won't be more down, but typically around holidays we see a little bit of a bump. And CW was put in here as well, that maybe the first 2 weeks of July historically have been bullish. So, but holidays we usually see a little bit of a bump. So if you get a little bit of a break today, yes, 2 days early on your trade. And again, I'm not a big proponent of market timing. However, I think you can, I think when you're talking a 4-month out trade, you can certainly be a day or two early or a day or two late. If you get a good down day today, might be a good opportunity there if we can see IV jumping up. Now the VIX is up to a whopping 13.07, as you can see over here on the right of my chart, or left of my chart here. It's up about 5% today. So you're getting a little bit extra volatility there. IVR on the platform is all the way up until, all the way up to 14.7. But anyway, I think we're overbought, but I think we're still bullish overall on the weekly trend. So 112s are good. I think ratio spreads are still an opportunity, and I will continue to do the 120 DTE trade, which we do have those on currently. So we're sitting on one already. So I don't need to add a naked put trade. That one's already in the works. And I do have some XL 112s on. I don't have any other standard 112s. I like these XL 112s right now as a discretionary trade, and we'll talk about it a little bit more in a little bit today. But we are sitting at the 151 days, so we could be looking at adding another XL 112 trade, and I might be looking to adjust one of the current ones. So we'll talk about that. All right, so there's ES again. Overall bullish, longer, bullish in the current term. Maybe a little bit of consolidation and weakness currently. Nothing to write home about. If we take a look at oil, so oil's been on a tear since it really, you got this nice hammer candle back in here. The week of the beginning of June. So hitting this low on June 4th, starting to reverse on the 5th and 6th and 7th. So this created that whole candle, and then we have been off to the races from the 72 all the way to 82. So 10 points up, almost what, 15% rise in oil during that time. But if we're looking at things overall, we're in a nice triangle format here. We could break to the upside, which would be bullish. On the weekly charts here, we do have a bullish PSR that triggered last week and continues this week. MACD is rising, RSI is rising. So overall, I like where we are on oil. We're just riding along, a little bit below, a little bit above, a little below, a little above on this 21 EMA, getting into the end of this triangle pattern. So we'll see how this resolves. But right now, it looks like things are pretty positive, even though on the daily, it might be running a little bit out of steam on the MACD, but RSI is still rising. Squeeze is still firing, even though it's long in the tooth. I think this thing sets up, decently for 1-1-2 trades. So I like 1-1-2 trades. I like ratio spreads on oil. I liked it better down here to do like a naked put, 120-day naked put. I don't know that I'd make it a campaign, but I think you can put those in there. Yeah, a bit of a cup and handle type of situation, Mark. And I don't disagree with that. So you've got a pretty nice cup handle formation. I just don't think we're going, are we going to rock it all the way up? I don't know. But I'll tell you, some of the moves that we're seeing today are predicated off of, I think, the debate from last week. I think they're just delayed moves and delayed reactions a bit to the debate. And things that are happening since then. So I'm not going to get political here for the most part, except I believe that debate kind of swung things pretty significantly one way, and that is a very pro-oil. I think you've got to look at interest rates potentially staying up a bit due to some of the things that could potentially happen with the new president coming in. Here. So I think some of the things that are happening in there today between bonds and oil today, I think, you've got a president who is going to be very pro-oil, potentially coming in. I'm not saying that there's a clear victory, but right now after that debate, the markets, I think, are starting to factor this in a bit. But you've got a president potentially that's, again, pro-oil and pro-fossil fuel, and not a big friend to the EVs out there. But we'll see what happens as we head down the road. All right, so oil moving up. I think 1-1-2s. I just don't think it's strangle exactly right now. I do have several strangles on. Technically, with the RSI in between 40 and 60 on the weekly, it's not bad, but we're really starting to see some momentum moving to the upside. On the daily, we're definitely moving towards an overbought territory. It's not a bad strangle. I'd do it. I don't need to do it in my account. I think strangle would be of the opportunities here. I think a 1-1-2 and ratio spreads are a better trade on oil. And if you guys are following Timur and his trades, I think that oil wheel strategy that he's got, I would continue to think that that's a good trade type of setup. And I think ratio spreads and 1-1-2s on oil are good opportunities. All right, let's move on to bonds, which is everyone's subject today, where it's always got to be panic posting. So today was, what's going on in bonds, and what's the news in bonds. Really, there's not a whole lot of news out there on bonds. It's just, again, I think some fallout a bit from the debate if you're taking a look at that. And if we look at, hang on, ZB here. I'm just taking a quick look at the news. Yields are rising on Trump's debate performance. So that's a little bit of the feedback that we're getting there, is that Treasury yields rose across the curve. The bond market is starting to price in a new increase in the expansionary fiscal policies from the next president. So based on Trump potentially coming back to the White House, you can see energy stocks, mainly driven, oil being driven higher, and bond rates, yields being driven higher a bit, and that is affecting your ZB. It's not really going to change anything for me on it. I'm still going to stick with the plan we have. It's actually one of our strangles is up pretty solidly today on this news. So actually on bonds, one of my strangles is up. One of my strangles is slightly down. My 112 is down a bit, but that's all good. And then obviously the naked put is down a bit, so that's what's being hurt the most. But we're not even close to that. So I think on bonds right now, as we take a look, I still think these are good long term. We're still in an uptrend overall here, even though we're in this triangle pattern that we're setting up for here. Let's see if we can pull it up. So we got this nice triangle pattern. We've been to the top, we've been to the bottom, we've been back to the top of this triangle, and now we're heading back to the bottom. It's all been pretty much this same routine, but all along we've been sticking around this 21 EMA. It's still, in my opinion, not a bad strangle opportunity. So I think on ZB, I think a strangle here is good. I think a 112 here is still good, especially here if you liked 112s before, and you've had this pretty big downdraft for the last, 3 weeks, counting, today, moving lower. I think this sets up pretty nicely on a 112 trade. You're getting further out of the money on the naked puts. You've got a trap in place. I think they set up decently here for a 112 on bonds. So overall, that's not bad. Let me see questions here. Would I disregard my trade plan if I hit 200%? I don't know what you're referring to, Mark. I don't know which trade, oil or something, or I don't know. Bonds, I don't know what you're referring to. So if you want to clarify that, Mark, I'm not going to disregard my trade plan. So if I hit 200%, so I guess if you're saying if I take a 200% loss on something, would I ignore it? No, I'll just stick to my plan and I'll take my loss and I'll move on. If I weren't already in naked puts or 112, would I be opening at this level? Yeah, I probably would. I probably not do a naked put at this point, but I certainly, since it's the naked put on bonds was predicated on my fact that I was bullish and that we were moving nicely above the 21 day moving average. Now that we've reversed on the weekly back below, failed at the 50, and we're moving back below the 21 here, and we are still in a bullish trend and bullish PSAR, but if that changes, right now the momentum's down, so I would not be putting naked puts on here. But a 112 is something I would consider because we would have the trap and we would be farther away. So I do think the 112 is still a possibility. All right. Yeah, my 112 is down on it. So yeah, it's all good. I'll just follow my plan on that and we'll see where it leads. But right now there's nothing to do on bonds. We let those things play out. All right, taking a look at gold. Gold just continues to also be in this tight volatility box. I mean, look at this thing. This has been in here for what? We can extend it out now even further. So this is like 7 weeks. Gold has been sideways for 7 weeks. I think gold is a perfect strangle opportunity. Here. So I think gold has been setting itself up for a nice strangle opportunity. We are in gold right now with a 112 trade, just to put debit spread, which is actually in the money there, which is perfect. I'm just letting that thing continue to generate cash. So it's got 24 days. I don't want it to leave the trap on me, but I'm pretty good shape right now as gold just keeps moving sideways and it keeps decaying. So that put debit spread is really paying off on gold. We've got a strangle on gold. That thing is up 33% in 14 days. I've also got a naked put on gold. Again, this is not a campaign trade version. It's just a naked put. I'm still using the same management of 40% profit, 3x loss on it, and that thing is up 14% in 45 days. So that thing's doing just fine here. And then we also in gold added a new 111 trade a week ago. So last Monday we added a 111 trade. That thing is up 27% in a week. So gold performing pretty well. I think there's a strangle to be had in gold. I also think if we're looking at the weekly, it's just this consolidation right now. Nothing terrible happening on gold. It just doesn't know where to go. Right now, MACD is falling a bit. RSI is just dead flat. The squeeze is losing a bit of its momentum on the weekly. So we've been losing some momentum weekly, but the daily has definitely not. It's just dead flat. I think why fight anything but a strangle here? You could do a 112 like we did last week or a 111. I think if I'm adding something, a gold strangle here is a good looking trade. All right, let's look at the Aussie dollar here. So as we're getting into the Aussie dollar, this thing also continues to just move itself sideways. And we've been in this thing for 8 weeks now. So 8 weeks of sideways trading. I mean, just a perfect trade setup for strangles. And I don't think you can do much better than something like this. I'm going to look at strangles again in 6A. We did have a strangle come off today, and there's no reason to not replace that. I mean, your RSI is at 54 and 52 daily and weekly. Perfect. You know, it's pretty, I mean, you've been flat and hardly had a 0.01 move maximum for 8 weeks. To me, it's a perfect trade for a strangle right now. Also, though, what this does look a bit like as you're looking at this is also starting to set itself up a bit here. If we zoom in, you know, we really do also have a bit of a ascending triangle, which is one of my favorite patterns. So
it looks like he's in the right place.
I'm not sure who that was, but make sure you guys are muted. All right, so I think you've got an ascending triangle. Now, my favorite patterns are triangles. I love symmetrical triangles, ascending triangles, descending triangles. My second favorite pattern is the wedge pattern, rising or falling wedge pattern. So you have a couple different options, but this is also starting to look a bit, you know, not only is it in a sideways consolidation, but it is still a bit of a ascending triangle. So if we do break above here, 6A could possibly run. So you have some options. I don't love 112s in it, but as much just because of the cost factor, and even the cost factor on strangles is significant, but I do like the Aussie dollar. So I think a trade here, a strangle, certainly a good setup. On 6A, if we look at the euro, which is 6E, let's zoom in here. Hope you guys can see this stuff. Okay, totally, you know, sideways here as well. Not quite as much as the 6A because we had that big drop here back on June 10th, where we June 9th and 10th or 7th and 10th over the weekend with the whole Macron thing. But it's kind of leveled itself out a bit here. And you've really stayed inside this range now. So staying in this range, we haven't gotten any worse. We've pretty much just moved sideways. The 21 has moved down. Okay, you're sitting dead at 45 and 47 on RSI. So RSI is flat. MACD is kind of rising a bit on both, but not significant. And you've also got a rising PSAR here. So it's overall still fairly bullish. We just had one week where we dropped on it. I do like 6E here for a strangle opportunity. I also think a 112 on 6E is not the worst thing. And if we look at the daily, we're starting to tick up and move higher. And on the weekly here, just no movement at all. So I think strangles would be where. I'm going to mute you guys again. Okay. Just try to stay on mute if you guys can. But And if you can, keep your cameras off. I can't like shut them all off and watch them all the time, but if you guys can, that way it doesn't mess up the recording. People can see the full charts. So keep yourselves muted, keep your cameras off, and we'll see how it goes. But 6E, yeah, I mean we'll see what happens with Macron and that whole piece. That's the wild card there, which would make me a little hesitant. But I think you just got to keep an eye on it. But you can't guess what's going to happen. You just have to trade what you see. And right now the charts are telling me nice strangle setup. So all I can do is play the percentages and I play the odds and I look to see if my charts kind of confirm that. Okay. But you let the probabilities play out. You cannot use the news and guess what the news is going to be on it. I think it's something that you just continue to take a look at. And one thing on the euro here is that IVR is at 82%, okay, or almost 83%. So you've got really good IVR. And if you look at 6A, it's at 55, which is not bad either. And we talked about strangles on gold, which is at 54 IV. So you've got decent volatility on most of the things that we're looking to trade. Oil is low at 20. So oil would be the least of those. And bonds has moved up into the 30s as well. So overall, I think 6E, not a bad setup. If we look at the NASDAQ, okay, tech stocks have been pretty much just moving sideways for weeks. So we're also in this bit of a sideways consolidation period here for the last really 2 to 3 weeks on the NASDAQ. We're no longer overbought on the daily, which is good to see. We're still a bit overbought on the weekly. Wouldn't mind us coming down, tagging this trend line or the 21, and then moving its way higher. All right. Wrap up here with a few. RTY, been moving sideways overall here. So RTY moving sideways. I think, this has been a beautiful strangle setup on RTY. We have a strangle working here. We're up 47.9% right now on RTY, which is great. So I think RTY also sets itself up for a strangle. You're at 51 on RSI here on the weekly and 48. I mean, this is just perfectly set up for a strangle opportunity. It's bearish PSAR. It's now bullish PSAR over here. I think RTY sets itself up for a strangle as well. So there's a lot of opportunities out here, depending on what you're most comfortable with. I think you can't really go wrong with a lot of these. So there's 1-1-2 trades. There's strangle trades on here. I think those are all set up for you pretty well. Copper is now back into a range here where I think copper is in a strangle setup as well. So you're back down to the 21. Copper's come all the way back down now, and I think copper is also set up for a strangle trade. I don't know that I'm 1-1-2 fanning of these things, but it's below the 21. The 21 broke the 50. And can we go down further? Possibly, but it's bullish on the daily chart a bit here with the technicals, and it's a little bearish on the weekly chart. So I think that just sets up really well for strangle opportunities. That's pretty much it. I'll cover maybe live cattle just for the heck of it. In here, this thing broke out of this trend, of the downtrend line. What I would expect is you break out of the downtrend line, you come back down, test it, and bounce off of that. So I think that you have a nice bullish opportunity here. The weekly, to me, looks bullish. I think it's also a potential strangle setup. So LE, I think, sets up for a strangle. I think it also sets up for a 1-1-2 trade on live cattle here. And I like this pullback after the breakout of the downtrend coming back to the 21. And then I would look maybe potentially, and this is a little bit of a hammer candle today. I think you can get a little bit of bounce off of this. And so I do like the setup there. I don't really want to cover too many of these other ones. I really don't trade wheat. I mean, I don't know anything about wheat, and I don't really like trading wheat or corn for the most part because, if it doesn't rain for 3 days, prices will go up. If we get too much rain, prices will go up. Okay. Who knows when prices are going down, when prices are going up. And I can't trade anything that acts of God weekly are going to screw up my trade. And if you're in corn, you probably got hurt pretty good in the last week on corn. Why? Who knows? But I hate them. So I don't even know why they're even on my chart here, probably because in case somebody asks me, but I really am not trading corn or wheat. I don't like them. There's too much involved in them. It's easier for me to just focus on 4 underlyings, and that is the S&P, oil, gold, and bonds. Outside of that, I'm pretty good with Forex on the Aussie dollar and the euro. That's pretty much it. I know my stuff. So there's where we are. So I just identified a ton of trade opportunities, of which you got strangles on 7 different underlyings. You got 1-1-2s on a handful of underlyings as well. So I think there's no shortage of trade setups this week. And I think we just keep watching what's happening on the S&P. But I think some of what we're seeing today in the markets is still fallout from that debate, which was, just a disastrous, for both, but more for Biden than anything else. Again, not being political here, but if that moves Trump, even more as the front runner here, and looks like it could be a runaway, then you've got to start to think, what are other things going to be impacted here? And you're starting to see a little bit of that today with bonds. The market's pretty much unfazed and doesn't care. And you can see oil a little bit, although I don't really want to attribute all of that to the debate. I just think it's a little coincidence in there. So lots of things to trade coming up. And if we see the dollar strengthening a bit, I would also think that you'll see some strength in the dollar based upon what's happening in the political landscape as well. Dollar hasn't done well for a while, but now it's starting to strengthen a bit. All right, let's wrap up. But if you want, I can do a few stocks if you would like, and give you a few stock opportunities in here. And if you don't, you can jump off. If you want to trade some stocks, we'll take a look at some stock opportunities. And there's a few trades that I really like. But give me 1 second. I'm going to pull some notes from the weekend. And I haven't had a chance to put some of these up yet. But we'll get to AMD in a second. But I think Micron has had, some of these semiconductor stocks have had a unbelievable run. And now you see Micron pulling back to the 50 here, where it's been before and moved higher. Okay. It's certainly in a downtrend right now. So you're a bit bearish on Micron, but it's something to keep an eye on here as we move forward. Let me also take a look at Broadcom. Broadcom just been on an absolute tear from earnings, and now it just came back to earth. I think it just overdid itself on earnings, came back to the 21, and then it's been holding that 21 and moving higher. I think Broadcom, not a bad play in here. So AVGO, which is Broadcom, I think this is not a bad stock play in here. Applied Materials has been on a nice run, bouncing off the 21, moving up, new highs, bouncing off the 21 here. as well. So I think this one is also not a terrible opportunity. Here, let's see what happens in the next day or so. Now AMD is getting beat up a little bit today. So AMD is down on the session, triggering a bearish PSAR signal today. MACD is still pretty flat. RSI falling just on today, but it's really been okay. 2 good days, Thursday and Friday last week, and then gave it all up today. It just can't seem to get its footing anywhere. So it's been struggling a bit. So AMD has been struggling a bit here, and from a news standpoint, I don't see any news or anything that would really make this. I think it's just that NVIDIA is getting all the attention, but AMD is the cheaper piece. But I think the demand for semiconductors is going to be so great over the next couple of years that, and not everybody needs the high-end NVIDIA chip. Some people will still need other chips where AMD can fill the gap in there. So I still like AMD. As somebody mentioned, Tesla. I mean, what a massive move on Tesla. So I mean, this has just been a great move. We had a Tesla trade. We won. We're out of that trade for a winner. Now it's just getting away. So Tesla just taking off, broke the downtrend. Now it's breaking the longer term downtrend, broke out of this box. Okay, hit the target of the breakout, and now today Tesla's just running. I think your opportunity of a lifetime was back here at 140, 150. I think on Tesla, we'll have to keep an eye on it and see what happens. But I think if you're not in Tesla now, you've probably missed a good chunk of the opportunity on Tesla. I think that's starting to move away from you a bit. So there's Tesla. Let's see. Anybody else in chat? Delivery numbers tomorrow. Obviously, people don't care about those delivery numbers because or they already know the numbers and it's rocketing. NVIDIA just pulling back. I think NVIDIA is not in a bad spot here. On the weekly, it's still very overbought, but it's starting to drop out of overbought. On the daily, it's just hanging on the 21. This is not a bad spot on NVIDIA. And if we look at Apple, I think it looks, halfway decent here. So I think Apple could be ready for another move higher. And Apple is really doing well. Microsoft setting up for possibly another run to new highs. It's a near highs. Amazon, I think Amazon looks good as well. I think you can't go wrong with most of those. Meta, a little bit of weakness here, pulling back. See if it holds the 50. If it does, I think this is an opportunity. Google, just off its all-time highs. Here, we already talked about NVIDIA, Tesla, Netflix, Costco, which to me is one of the greatest companies on planet Earth. You put Costco and Amazon together, they will rule the world if they want to, because they can go into any market and sell anything, and they already have a giant base. So I think if Amazon goes into prescription drugs, I think they can close Walgreens out and put some pressure on CVS. I think if Costco gets even more into drugs and prescriptions and that kind of stuff as well, I think both Amazon and Costco can push CVS and Walgreens to the curb and take over from those. But it's had such a good move. It's finally coming back and giving us a better entry point here. Let's wait and see how this thing shakes out. And then I always love to watch GME. I don't know why. I think I'm just rooting for it to go to zero and wipe out all of these meme stock people. It's probably mean, and it's going to cause me some bad karma at some point, but I would not be upset to see GME go to zero and all the Roaring Kitty stuff just go to zero. All right, so, and then Snow here, nice move off of the bottom here. This is it was a nice turnaround. You saw it go from oversold, reversal everywhere here, and now it's got momentum to the upside. Snow looks pretty good. Yeah, Chewy is the new GME. Well, I heard GME was actually buying Chewy or something as a rumor, potentially. ARM has been a fantastic stock. If you are looking at a stock, let's wait and see if this thing comes back here. Nice hammer candle today off of its lows. ARM, great opportunity to get in as well. And then the Chinese stocks have gotten the living tar beat out of them. So they're being beat up pretty heavily here. BABA down. If you're a fan of Chinese stocks, and Chinese stocks are taking a beating, because again, if you go back to the debate and you start to think that, okay, well, Trump may win and he may win pretty big, that is not going to be good for China. Okay, Trump is not going to be super China friendly, and stocks that are Chinese stocks are not going to perform as well under Trump. It's going to be a lot more tough on sanctions, tariffs, all of that stuff. So Baba and Baidu both getting beat up pretty good out there. And then Palantir, we've been in trading. This thing has been moving itself up. So some good opportunities there. Yeah, Walgreens was already in bad shape. I just need to be put out of their misery. And then I think, to me, CleanSpark, okay, here is a good trade opportunity. We've been in it a couple times in active trader. I'm going to be looking at it again here. I like the move today on CleanSpark. I do like this this trade setup here, and I think you could also start to look at Caterpillar and a few others. Caterpillar and Deere both. Deere taking a pretty good hit the last 2 days, but as these things sell off, I think Caterpillar is not the worst looking stock here as we sell off. And then Leslie, let's just hit a couple quick things. Coin, I like anything to do right now with Bitcoin. So MicroStrategy, nice pullback here on the weekly to the 21. I think this is a potential entry point for it here. So I like MicroStrategy as a Bitcoin proxy. I like Coin in here. Nice pullback overall on Coin. So we'll keep an eye on this particular thing. Nice pullback. It's starting to rebound back up. It's got momentum going on the MACD and the RSI. I think Coin is a potential play. If you're looking at Ethereum too, and on this pullback, that may be a play. There's no options, but you can potentially get long it. And then you also have the Bitcoin ETF. And then travel stocks are on fire. So they're pulling back today, but Airbnb looking pretty good. Norwegian Cruise Lines was looking pretty good today, got slammed pretty heavily. I think this gives you a chance to get in. Airlines down here, and then American at the bottom. So I think there's some opportunities in a few of these. And one of the best stocks of this year is Lilly. This thing has just been on a parabolic move off of its lows. I mean, you're talking back here in the 300s, and it's at 900 now. So this is a 300% move on Lilly in this last year and a half or so. Lilly's not a bad stock to get into. So there's a couple quick rundowns on some stocks as well. But overall, I like futures. I think there's a lot of trade setups. I gave you a bunch today. I talked about TLT on this move lower here. I will probably look to add to my leaps position. So I've got leaps on TLT in the main service. They're down a couple $100 or so overall. So TLT has been weak. Friday and today it's gotten beat up pretty heavily. I think this is giving you a chance to get in. So I may add some more leaps. I've got 5 leaps that I entered here. I might add to my position. Now, typically I don't add to a losing position, but I'm really pretty bullish on it, and I'm not really trying to dollar cost in or add to a loser. It's just giving me an entry point here that I really, really like. All right, and then the last question here is, are you using primarily credit spreads for trades? with a long thesis. I'm using credit spreads for a trade with long and short thesis. So if it's stocks, I'm primarily trading credit spreads. You can trade some butterflies. The problem with me with trading butterflies to me is you have to be right on not only the direction, you have to be right on the duration, and you have to be right on the magnitude of the move, which makes butterflies extraordinarily difficult to make really good money on. Sometimes they blow through, your tent. Sometimes they don't get quite to the tent. I have a tendency to put tents too close, or close to the expected move, and then it blows through the expected move, and I don't win, even though I was right on direction. I was wrong on the time or the amount of the move. So I struggle with butterflies, but credit spreads, all I got to be right on is direction. I don't really have to be right on the amount of that move, and I don't have to be right on the duration of the move exactly. Okay. I just have to not be wrong significantly on direction. So to me, the credit spread or the put credit spread is the best trade for me out there. I love the put credit spread. And if I'm doing something longer term, like the Palantir trade. Now, our Palantir trade's up 72% now in 26 days. That Palantir trade is a put credit spread, but I like to do these if I want to own the underlying, kind of my version of the wheel. I like to go with like a 60 to 80 DTE on a stock that I wouldn't be opposed, even though I don't love getting assigned. If I take assignment, I could wheel it, and I will wheel using call credit spreads as well, not just calls, call credit spreads. So I will put on a put credit spread. That way, if I get assigned, I'm probably going to make money on the long put as well as getting assigned. And I'll have already taken in income. And then if I get assigned, I'll write another call credit spread. That way, if it blows through my call, I'm also going to make money on the long part of that spread as well. So that's my favorite strategy for that. And I think if you look at some of these longer term pieces, you can do that. All right, that's enough for today. Let's jump off, and we'll get back into Discord with you guys. And hopefully this was helpful, but lots of trade ideas, ES 112s, ratio spreads, naked puts, XL 112s. I may look at an XL 112 today. I think this is a good setup for that. This is going to give me some safety with a big wide 300 wide put debit spread. It's out 150 days. It's going to help me with anything in the short term. So let's take a look at that, and then we'll probably get a strangle on. We'll put some trades on. Have a great rest of your day, everybody. We'll see you in Discord. Take care.